Welcome everyone. Welcome to our webinar today. My name is Ellen Lai and I'm going to be your host today. I am the director for Page Personnel Business and I now manage 5 teams within Page Personnel, including financial services, contracting, digital and technology, healthcare and life sciences, and secretarial and HR. Our webinar topic today is the business digital model, the future of virtual banking by Dan Jones. So just some housekeeping before we started. Please note that your mic and your video has been disabled, so you do not need to do anything to adjust it. Second of all, you will be able to interact with our marketing team or myself at any time throughout the webinar. So you can chat on either the chat box or you can click on the raise hand button and we will answer any of your questions accordingly. We'll have a Q&A session at the end of the webinar and then we'll answer a few questions. So if you have any questions throughout the webinar, please type out your questions at the Q&A button. We'll also have a short and sweet survey at the end, and there's a link that we'll send to you via chat box. So please just stay for another 3 to 5 minutes to complete a quick survey. So without further ado, I'm going to introduce our speaker to you today. Our speaker today, his name is Dan Jones, and he is the partner for Oliver Wyman Digital. He had been in the industry for more than 12 years, and he had helped to launch 2 virtual bankings in the market. And he had also helped various global financial institutions on digital initiatives. So today he's going to share with us how has the virtual banking landscape, Asia versus Europe, evolved over the last 12 months? And what does the future look like for the digital business model post-COVID-19? So I'll now leave the time to Dan.
Thank you, Ellen. Hello, everyone. Thank you to Michael Page for having me on today. As Alan said, we're going to touch today upon virtual banking. We'll look at how it's been started in Europe and how things have moved over to Asia, and also what the impact of COVID-19 has been. What this means for incumbent organizations as well, as we've seen a lot of defensive plays to compete with the launch of new virtual banks from some of the existing financial services, and what we think the future will hold for both sets of organizations. So pre-COVID, most financial institutions were really just getting started with digital transformation. They were probably at the beginning of their programs, and we saw some virtual banks start to pop up in the US, in Europe, and start to really challenge the existing incumbents. So household names like Revolut, Monzo, these names in the UK and Europe were becoming more and more familiar. And existing organizations were starting to take notice of this. And this led to a wave of virtual banking applications in Asia, and the regulators came up with frameworks, starting with Hong Kong, to enable customers to have more choice and to allow more competition in the market. However, when COVID hit, lots of things have changed, as I'm sure you're very aware. So in terms of what we have seen change, I guess it's really across 3 categories. First of all, consumer behavior has changed significantly. We have seen large increases in digital payments. We've seen a large growth in online investment products and savings products as people are spending less and looking to save more. And finally, we've seen people simply sign up to mobile and internet banking at higher rates and become more and more familiar and almost prefer mobile banking now to branch banking, which has really played into the hands of some of the virtual banks that were being set up. In terms of how we engage with customers, if you're an existing bank, as I'm sure you'll all be aware, that has again changed significantly. It's now via remote tools or innovative tools such as Zoom, and those digital channels have become more and more interactive, particularly for more complex transactions and products, like if you're in for a mortgage or if you're looking to refinance a loan. People want to do those online, but still have that human interaction. So it's really been a big challenge for how you essentially stay human in an increasing digital world post-COVID. Also, we've seen RMs work very almost more efficiently, less travel time in between sites. And all of that, as I'm sure you're aware, has led to big changes in terms of how we work internally, with most of us working from home during these lockdown periods, but also faster decision making internally. And we've really questioned why we have to go through so much governance, why processes are the way they are. And really, necessity has really been the mother of innovation in some organizations. So this is, I guess, proven to many existing organizations that they can really work differently, they can operate differently, and actually they could potentially launch their own virtual banks and challenge brands in the market to work more like a startup than a large corporate organization. So in terms of how people have responded, if you're an existing financial organization, what we've seen in the market has really been three different categories. Our fast responders immediately reacted and they put in proactive interventions to make sure that they would survive and serve those customers in these unprecedented times. We've also seen some organizations playing catch up. So they initially waited, they saw what was happening in the market, and they recovered themselves from obviously the high impact of COVID. And they're starting to reprioritize their portfolio of programs and starting to roll out those interventions needed to essentially operate in what we're calling the new normal now. And finally, we've seen organizations adopt a wait and watch strategy. So really checking how those consumer behaviors are evolving and also what the competition is doing before committing to a specific course of action. So with that, we would like to start our first poll of the day, and we would like to ask, how would you characterize your company's response to COVID-19 and adapting to the new normal? So has your organization been a fast responder? Are they playing catch up? Or would you actually say that it's a wait and watch strategy? So you should see the poll on your screen now. If you can just click your choice and be sure to press submit. And we can see those responses start to come in. So interestingly, it seems to be a bit of a split so far between fast responder and playing catch up. So around about 15–20% of you saying that your organization is taking a wait and watch approach. But as those final votes are coming in, it seems like it's an even split between fast responder and playing catch up. And to be fair, that is also what we have seen in the market in general from existing organizations. Okay, so we'll end that poll and we will move on. So we'd like to start talking about virtual banking. So the trend really started in Europe in around about 2014-15, and we started to see these banks emerge with initially basic offerings, usually a sort of basic deposit type account, a mobile only offering, and they rapidly grew and scaled. So Revolut has probably been the standout player with over 10 million customers. Monzo, increasingly in the UK, is now a very well-known brand with its bright orange card. And these companies across the sort of retail banking really started to get existing organizations to take up and take notice. So they run on low-cost tech stacks. They're highly scalable. They're resilient. They've got very good UX. And they're encouraging their customers to switch away from their existing banks, but actually they haven't been that successful in doing that. So the trend we've seen in Europe is lots of people have signed up, lots of people use these accounts typically when they for low volume transactions, when they travel abroad and so on, but they're not really switching their salary to their main accounts. They're not really paying their bills out of these accounts. So around about a third of Monzo customers, as an example, who have actually done that. But that is increasing. So it has been enough for existing organizations to stand up and take notice. Similarly, in the SME and business side of things, we have seen a similar trend. So OpenAuth is probably the standout example there. So OpenAuth does lending for small to medium-sized businesses and is highly, highly profitable. It's probably the most successful example of a virtual bank getting to profit the quickest. And they use AI and machine learning to monitor their loans, and actually their default rate is close to zero, and that's enabled them to be incredibly profitable, and a noticeable example in Europe, and they're now looking at Asia as a route of expansion themselves. So with these various different successes, we saw Asian regulators start to take notice as well. But for incumbents, what this meant is that they had to make a choice as to how they responded. And we've seen a range of different types of responses here. So along a scale of, I guess, more passive responses to more aggressive responses, we've seen some organizations again take a wait and see approach. So monitoring the progress of the Revoluts, of the Monzos, of Starling banks of Europe, and deciding whether or not to launch anything themselves, or just rely on their own strengths and trust their own brand, and that customers won't switch away from them. Next, we have a strategy of reduced prices and essentially copy features. So we've seen some banks recognize the challenge posed by these challenges. They've reduced their pricing, they've tried to make themselves more accessible, and they've increased the level of functionality on their mobile and online offerings, and in some cases simply copied some of the more popular features of those virtual banks and rolled them out themselves. We've then seen players like Santander, probably HSBC, simply double down on their investment in expanding their digital capability. So obviously HSBC didn't go for a virtual banking license in Hong Kong. They were very public and forthright about their belief in that their existing digital propositions were good enough and provided customers with what they needed. And they continue to invest in those. Then we've seen, I guess, very strategic and structured partnerships. So some of those larger incumbents working with the likes of Amazon, Apple in some cases, to really tap into each other's customer bases and core capabilities and bring together a key proposition. And one interesting development in this area is, I guess, existing banks using their own technology to allow others to build on instead. So this is a very emerging strategy that we're seeing from the likes of Standard Chartered, who have launched their product called Nexus, which is a back-end banking as a service, essentially, that allows anyone to build on the front end and own that customer relationship. So potentially, a non-FS brand, for example, could enter the market but use Standard Chartered technology to offer banking products. This has worked in HSBC's favour in the UK with the launch of M&S, of Marks & Spencer's bank. So it's an M&S front end. However, when you pick up the phone, you get through to a HSBC call centre, you use HSBC technology in the back end. So this is one defensive play that is increasing in popularity right now. And then finally, the more aggressive play is launch their own attacker. So if you're an existing organisation, you want to launch your own virtual bank. It could be under the same brand, it could be a completely separate brand, or it could be something like it's powered by the existing brand. So we've seen varied success in this area. Hello Bank has been quite successful for BNP Paribas in Europe as a challenger bank, and that got to profitability quite quickly. One that I was personally involved in the UK was the launch of Metal Bank, which was RBS's defensive play for SME customers. And we've seen Simple being very successful as well. So this is a topic where I think pre-COVID, most existing organizations were either thinking about doing their own attacker brand or in the progress of doing that. And post-COVID, I think we've probably seen those incumbents double down on that investment. So they've tried to accelerate the launch of those virtual banking initiatives within their own walls to compete with what's going on, but also those change in customer trends that we talked about. So more and more customers want to use mobile. They're more familiar, more comfortable with that now post-COVID, and they really want to take advantage of those changing customer behaviours. So now that we turn our attention to Asia, so what has happened so far when we talk about virtual banking in Asia? So we'll talk about Hong Kong and Singapore in more detail shortly, but what I just wanted to focus on initially was some of the standout examples in Asia. So Korea, for example, has launched KakaoBank. It currently has 11.5 million users, but they really leveraged the existing customer base of the telecom KakaoTalk that has over 50 million users, and that was a very successful route to market, and they very quickly built up that critical mass of customers that is needed to really launch a bank. And that's an ongoing challenge for any virtual bank who's looking to launch. Judo Bank in Australia is continuing to do very well, dedicated to being an SME bank for small businesses, offering deposit products and lending for small businesses, and that continues to grow. Tomorrow Bank is actually a really good example of a defensive attacker play by UOB. So UOB recognizing what was happening in the market, and they wanted to launch their own digital brand. So Tomorrow has launched with 100k users in Thailand and Indonesia, and that continues to grow, and they're really targeting the millennial young customer there. However, the main thing that we've seen in Asia, and probably this is the best example globally of a successful challenger being launched, is really what's happening in China. So WeBank, backed by Tencent, MyBank, backed by Ali, respectively. They've launched incredibly low cost, efficient technology stacks. They've grown at huge rates. They've got over 200 million customers for WeBank. And that scale has not yet been seen elsewhere in the world. So in Europe, these two are not often talked about, but they really should be. And the strategy at the moment very much is these two are now pushing out their technology stacks to others so that they can build on the front end, like we talked about earlier. But WeBank, as an example, the cost of running an account on their technology stack is 50 US cents, and that is just incomparable to the cost of many existing banks in terms of how much it costs to run the accounts on those different technology stacks. So WeBank and MyBank really leading the way in efficiency and scalability, and hopefully we'll see others follow suit across Asia as time goes on. So now we turn to Hong Kong. So we saw the regulator HKMA issue a licensing framework to attract more competition in the market. Hong Kong, though, is already incredibly well served when it comes to banking. It's currently got 164 licensed banks. It is one of the most densely populated areas in the world for number of bank branches and ATM. So really, the primary driver here was to offer something that was truly mobile, with no branches, and would offer something really differentiated to customers. So as the application process went on, we saw 8 winners emerge, and licenses were awarded to Jonan, Mox, Livy, Relab, Antbank, Airstar, Fusion Bank, and Pinan One Connect. And for the majority of these, a consortium-based approach was taken, with the exception of Pinan and Relab and Ant. So we saw multiple existing organizations partner together to build this. So Mox, as an example, is majority owned by Standard Chartered, but has also partnered with PCTW, CTRIP, and HKT. And they've recently launched, and what we might see is then try and leverage the customer bases of those other organizations to, again, build up that critical mass of customers. So far, we've seen 3 launch, but it really depends on your definition of launch. So John Ann has launched a basic deposits account. Mox has a card and a basic transaction account with your ability to save for specific goals in your life. We've seen Airstar launch again with a savings and deposit account. And we're yet to see what the likes of Libby have got in store, Fusion Bank and so on. Some of them have been delayed. So Fusion and OneConnect have experienced some delays as a result of COVID and other challenges. But we hope to see all 8 come out this year and offer something hopefully very different to what's available to customers currently in Hong Kong. So I've personally opened accounts in the last few weeks with Mox, with John Ann and Airstar, and I have to say that the UX is very, very good. It's a great experience. It's quick, easy to use, very, very simple. So I think definitely that they've started in the right direction, and hopefully we'll see the others follow suit. And it'll be very interesting to see what types of products that we see come into the Hong Kong market. So that was what's going on in Hong Kong, but as we look wider across Asia, Hong Kong was probably the first market to really go through with a full regulatory framework and put this in action. We've then seen Singapore follow suit. So they have issued their framework, they have accepted applicants, and very recently they've shortlisted 12 applicants for 5 licenses in total, and we'll have a look at those different applicants shortly. In Malaysia, they have confirmed that they will be releasing a virtual banking framework, and we expect to see the details of that regulation in December this year. But already there are many players, both FS and non-FS, starting to talk and think about how they can form a partnership to go for a license there as well. In Philippines, we've seen the initial steps to making some regulation come into law there. So in January this year, a initial regulatory framework was discussed in the House of the Philippines government there. In Indonesia, late last year, again, we saw some existing regulations be amended to allow customers to onboard virtually, so straight through without having to go into a branch, which is a step in the right direction when it comes to a framework that allows you to do virtual banking. So we may see a lot more from Indonesia, and they've certainly got the population like the Philippines, and they've got the mobile penetration to enable the virtual banks to be very successful in those markets. So in terms of Singapore, what you can see here on the slide is the current applicants and who they've partnered with. So again, familiar names like Ant, Grab, Syntel are all there. And from those 5 licenses, we expect 3 to be business or wholesale banking licenses, and 2 focused on the retail side. However, the regulations from Singapore have been quite difficult. So the capital requirement is incredibly high. So really it's forced a consortium-based approach to be formed rather than a pure startup approach like what we've seen in Europe from the likes of Monzo, who had to raise capital themselves. In Singapore, and much like Hong Kong, they have to raise that capital up front, and it is so high that you really need existing organizations with large customer bases and balance sheets to come together and form a consortium to do that. We have seen certain recognized fintechs be put off by this. So Revolut, as an example, initially were considering entering Singapore, but publicly said that they would not based on those high capital requirements, and that may have put off a number of other players. But there are some interesting names in here. ByteDance of TikTok, for example, I think is particularly interesting to see what they will do in this space. Razer, the large gaming organization, I'm sure will be able to leverage again its huge existing customer base to offer something that's very focused on millennials and gamers in Singapore. So with that, we then come on to our second poll. And what we'd really like to know here is two questions. So first of all, would you consider opening an account with a new virtual bank yourself? And to what extent? So would you simply say no, full stop? Would you say yes, and you're also happy to close your existing bank account? Or would you say yes, but you'd want to keep your existing bank account? So that is the first part of poll 2. And the second part is, which of the following products would you consider getting from a virtual bank? And the options are current account, mortgage, credit card, personal loan, and savings. So as you're voting, this really is the key question that many virtual banks are offering and the existing banks are thinking about. So what we've seen in Europe is lots of sign-ups, but not too many actually closing their existing bank accounts and keeping their bank accounts, and also a trend towards only certain types of products. So in Europe, a current account has been very popular, but for those bigger life moments like mortgages, like getting a loan, we've seen less enthusiasm to get those from a virtual bank. And as those results are coming into the poll, I think that it's pretty much the same. So the vast majority of you saying, yes, I want to keep yes, I would open a virtual banking account with another bank. However, you want to keep your existing bank account, 81% there, so a clear winner. And in terms of the products, most of you saying that you would consider a savings account or a credit card, interestingly, but personal loans and mortgages less so, and that certainly echoes what we've seen in Europe as well. Okay. So what do we think will be the impact post-COVID then on virtual banks? So positively, we've seen that the wider adoption of that shift to digital. So really not going into branch and getting more familiar with online and mobile banking has really played into the hands of virtual banks as people are getting more comfortable with that. There's also much more opportunity for differentiated products and getting those to market quickly. So there's new types of products that we've seen now emerge post-COVID, like certain health insurance products, coverage for Uber drivers, for example, looking to get protection over shipping people around in Singapore, key workers into hospitals, and so on. We saw Grab launch some very interesting insurance products in that area very, very quickly. And easy access bridging loans is also one of those products that we've seen increase in popularity. So there's a wider array of options, I think, available now for virtual banks to offer to customers. However, what we have seen is a reduction in the amount of available capital. So fintechs in general have been devalued slightly. They're finding it increasingly difficult to find new investment and new capital. And generally speaking, fintech investment has really dropped off a cliff in 2020. So that may be a challenge for some, and it will also be, we'll also see greater scrutiny from some of the regulators to really prove how sustainable these business plans are to make sure that they do turn to profit over the course of 3 to 5 years. So on the downside, what we have also seen is delayed regulatory support. So Malaysia, as an example, has pushed back their decisions on the framework. Singapore has pushed back a little bit. So because of COVID, we may see a delay in the new licensing frameworks that come out from certain markets in Asia. And finally, one of the biggest challenges for any virtual bank, and especially an existing organisation looking to bring in digital talent, is the fact that these digital skill sets were already hard to find, and this has been made even more difficult with travel bans, visa cancellations, and further COVID delays. So that has also hindered some of the progress in terms of getting that talent in the door and working. So in terms of what we think we will see going forward for these virtual banks, so we do still think that they will experience some very rapid early growth as they launch. again following in the trend of Europe. However, the big challenge will be how much do they switch away from their existing banks, and to what extent do they actually use their new virtual banks. We'll also see a lot of increased competition from the incumbent banks. So especially post-COVID, we have seen existing organizations really accelerate their digital efforts and consider launching these new brands. And that's really based on the fact that there is some belief that in times of turmoil, people just want that trusted brand and trusted infrastructure of a known bank. And I think existing banks are really realizing that, and they're looking to capitalize on that. We'll see a lot more data utilization to really drive data-led decisions. We'll see more and more data come in that will allow organizations to deliver very, very personalized services and highly personalized products. And I think that's definitely a trend that we're hearing that a lot of the virtual banks are focusing on right now. And finally, we'll see these virtual banks take a much more ecosystem approach. So someone like Starling in the UK, for example, is very comfortable offering other banking products, other insurance type products in its wider ecosystem that it does not own itself. And we think that we'll see that trend come to Asia and increase significantly. And this brings us on to our final poll of the day. Before we now talk about recruitment and what it takes to attract talent, we would like to know, how has COVID impacted recruitment when it comes to digital in your teams? So right now, are you currently recruiting for this type of talent? Or are you on hold? Have you got some freezes and you're looking to delay that? And interestingly, as those responses are coming in, it seems there is a clear winner. So most of you are saying that you are still recruiting, especially in the digital space. Roughly around 60% of you and 40% of you saying no. Okay. So let's move on to recruitment then. So there was a survey done this year to all of the virtual banks in Hong Kong and all of the incumbent banks, and they were asked what is the biggest challenge for you. And actually, difficulty in attracting and retaining the right talent was the second most popular challenge. So after security and cybersecurity, attracting the right people, especially when it comes to digital talent, so engineers, designers, product owners, is one of the biggest challenges. And this is really still the case in Europe. And I personally thought it was hard in Europe, but when I came to Asia, it was even harder. And I think, yes, Hong Kong is a small market, but what virtual banks and what existing organizations are looking for are really slightly different types of people. And I think we've come to recognize that it's not the standard profile that we're really looking for. And to use the Steve Jobs quote that we can see on the right-hand side, Apple really wanted to attract different types of people, the misfits, the rebels, brown peds in square holes. And I think virtual banks especially have looked to hire a different type of person as well as their core skills. And they've really tried to change their recruitment approach to match that and attract these types of talent. And at the end of the day, a lot of the top engineers and designers in the market know that they can go and work for a Facebook, a Google. They know that they've got good prospects. So attracting them and retaining them is really, really difficult. And I wanted to talk a little bit about our own experience in this and what we found we've had to change both for ourselves as Oliver Wyman, but also when we've launched virtual banks ourselves and new digital propositions for existing companies. What we found is that it's all about learning and not necessarily earning. So when you speak to the top designers and engineers, usually the number one thing that they want is to be able to develop their skills and portfolios. They want to learn new computer languages. They want to learn new ways to solve problems. and they want to be challenged. One of the key questions you might be asked as an organisation is, what are your open source challenges that you run? So they would have their day jobs, their key roles, but they also want to work on other challenges in their spare time, in conjunction with other engineers and designers. So it's really about articulating what the learning opportunity is when you're attracting these types of people. And with that, it's really also about making a difference and giving them a purpose in their work. And when I think in the past we tend to sell the role and the organisation, but when you're talking about this type of work, it's all about selling the purpose and the mission that you're on to achieve something for the customer or achieve an outcome in the industry. And again, this is something that the amazing digital talent that we see really want to focus on, and not so much the day-to-day and what they'll be doing. Next up is, we see that you have to create a culture that is, I guess, allows for the creativity of these people to really flourish. So open plan spaces, a very engaging employee proposition. They don't want to turn up every day in suits. But, it needs to be in an informal culture, and I think if you take Mox as an example, which is obviously backed by Standard Chartered, they've really adopted that. They've hired out a WeWork. It's a very different culture to the existing organisation to really encourage creativity and attract that sort of talent. Next up is, you need to go to where these people are and speak their language. So what we found is that the top engineers and designers, they tend to go to meetups, they go to hackathons, they use things like GitHub and Stack Overflow to find jobs, and this is where you have to also go to find them. And then also when you're there, they don't want to go through a very large formal process. They want to go through an informal process. And this is where you need to redesign the recruitment journey. We found that 5 or 6 stage formal processes are just not attractive to these types of people, and they would much rather go through an informal process over 2 or 3 stages. Meet their teams over coffee, understand what the mission is, how they can learn from this position. And get involved that way. And then finally, leveraging ANCA hires. So within these communities, they're well connected, and they're aware of what some of the more senior people are doing, and they will happily go with those more senior people to, again, achieve the same sort of mission. So looking at how you can attract teams of people that have worked together before, and get them all behind one single mission to deliver for you, I think is key, rather than reaching out one-to-one and attracting them as individuals. So those are some of the key things that we wanted to talk about today. If you do want to get in touch, then do so. Those are my contact details there. And I think next up is we're going to go to some questions.
Yes, so thank you, Dan, for such an informative presentation just now. I so agree with you. Whenever we meet with digital candidates, we cannot really suit up. We have to wear like t-shirt and jeans in order for them to open up to us. So yeah, so we do have a few questions. So I'll start off with the first one. So the first one here is that as virtual banking is currently on the rise, what would this mean for the retail banking sector? I think that's a really interesting one, because it is quite competitive and they do offer very similar products at the moment. So what do you think, Dan?
So I think what's important is that you look at the 2 or 3 year timeline. So the virtual banks need to get to market fast to prove that their brand and their proposition works. So what we've seen in Europe and what we've started to see in Hong Kong is these initial launches, they're offering basic deposit accounts. There's nothing really transformational about them so far, but that's not the exam question. And I think we've seen lots of incumbents look at that and go, oh, that's fine. We thought they were going to completely change the world. It's just a basic savings account. And some of them have maybe relaxed a little bit. And I really think that's the wrong approach, because what's important is what the product roadmap is for 2, 3, 4 years down the line. And we don't know that, right? That's obviously a well-kept secret within these virtual banks. And that's what people need to be worried about, because you need to get to market fast with a basic deposit to simply prove the brand and proposition. And that's what they're doing currently. Those products will develop and they'll iterate with customer feedback, and virtual banks can do this really, really quickly. So if your existing organization can't do that, then over time that's going to catch up, and you might unexpectedly find yourself in a more competitive area than you initially thought you might be. So I do think it's overall a threat. I think it does mean that existing organizations do need to do something different. They do need to launch different, more differentiated propositions in the market, and possibly do their own attacker virtual bank as well. It's not necessarily always the answer, but it's definitely a consideration that people should look at.
Yeah, thank you, Dan. So we'll go to the next question. So the next question is, so also from an anonymous attendee. So it says, will we see European virtual banks try to expand in Asia? Or do you think that there is any European bank, that they will?
I believe
Hong Kong.
Yeah. So I think there are many virtual banks in Europe that would want to expand in Asia. The question is whether or not they can. So the market is big enough, there is space to play, and I think there's plenty of revenue to be had for some of those newer brands coming in. But the challenges are really around which markets can they go to with the right sort of licensing. So Hong Kong, Singapore licenses are the right framework, but the capital requirements are really, really high. So the Monzos of the world, for example, they don't have the balance sheets compared to some of the consortiums that we've seen in Hong Kong. So what we may see is those virtual banks partnering and forming consortiums themselves. So I think Malaysia is the really interesting one, because I think most of them missed the boat slightly with Hong Kong. I think Malaysia could be one that a lot of them are targeting to partner up with other organizations as part of the consortium and enter Asia that way. And the other one, of course, is simply buy or acquire an organization that already has a license. So Hong Kong, as I said, has 164 licensed institutions. Tandem Bank from the UK recently bought one. So that is also a way into the market that we may see.
Okay, so the next question we have, it says, any other APAC countries that you think could benefit the most from virtual banking license? Yeah, I think Philippines and Indonesia would benefit because of their huge populations, but also internet and mobile penetration is really, really high there. So people are very familiar with doing things on mobile. So I think that's a great opportunity if they can identify key customer pain points to address. So remittances, as a good example, is always painful for many customers in those markets. So I think if a virtual bank came along to address some of those pain points, I think that would be very well received. I think there's lots of space in Hong Kong and Singapore to offer more wealth services, as an example. So we've probably seen the virtual banks look at retail and SME initially, but the wealth space is huge as well. And we've just seen SoFi acquire 8 securities in Hong Kong. So that's definitely an area where we'll probably see more activity across Asia. Okay, and then next, we probably will have some questions for 2 more questions. So, so the next question that we've got is from Philip Wei. So it says, can you elaborate more on the profit model of virtual banks? Say, take European ones as example. What's their benefit? What's the profit point in retail and SME unit? And what's the most profitable one?
So in most of their business plans, they look to turn a profit in year 3. However, Monzo, as an example, is still not profitable and has recently had to lay some people off. Their valuation has dropped. But when they've started out, they've typically looked at getting profitable in year 3. So the idea is that you build your deposit base quickly with a basic savings account, and then you move into lending, which is where you make the most amounts of profit usually. So that is the typical business plan that we've seen. But we've seen lots of variation in how well that's actually been executed. So OpenAuth is probably the best example in Europe for a profitable SME bank. And what they've done really well there is simply the technology they've used is very, very low cost. It's very scalable. It's very easy to use. But they've actually used incredible AI machine learning techniques to forecast future cash flow issues and forecast when those businesses may not be able to pay. And as a result of that, and it is a truly incredible record, is that I believe they've only ever had one default out of something like 6 billion of loans. So they've managed to be very, very profitable, very, very lean, low number of employees, and very technology focused. But I have to say it's probably an ongoing challenge for some of the more existing banks. Some of the other virtual banks like Starling and Monzo in Europe.
Okay, and then the next question, we probably will have around 2 more questions. So the next question is, what are some of the key challenges that you think the Asia virtual banks are facing at the moment?
So the regulatory framework is a very positive step forward. However, the requirements of those regulatory frameworks are incredibly detailed and the barriers are very, very high. So if you compare that to Europe and the UK, the barriers were significantly lower and the regulators played a more almost proactive hands-on role. So those regulations developed over time as the regulators simply spent more time on the ground with a lot of those companies. So you've seen in Europe, I guess, proper startups that have had to go out and find their own capital, raise their own capital, and evolve like any startup would. In Asia, those capital requirements have been very high. The level of detail that you need to go to in your business planning before you get a license in Hong Kong, for example, is incredibly detailed. You essentially have to start the business already to get one. You have to build your front end, you have to build your screens and show all those to the regulator before you get a license. And that's simply not the way that it happened in Europe. So I think that is one of the biggest challenges on an ongoing basis. But obviously it's a positive thing for the industry still. Recruitment is really, really difficult in Asia, as I said. And actually, in Asia, there's some nuanced consumer behaviors that make it even more difficult. So when we talk about the adoption of virtual banking and whether or not you're going to switch all of your bills to be paid out of your new virtual banking account, for example, if you take the Hong Kong market, there are certain consumer behaviors that are different compared to Europe. So quite often, a millennial customer will, in some cases, almost need the approval of their parents before they switch away from a known trusted brand like HSBC or Standard Chartered, for example. And that's something that I don't think virtual banks in Hong Kong, in Europe, really catered for or thought about. And it's something that if you are entering the market, there are lots of nuances like that you need to be aware of and cater for that make it slightly more complicated when you're looking to build that critical mass of customers.
Thank you. So perhaps the last 2 questions. So second last question, do you think the virtual banking service or products would be widely accepted by the Hong Kong society? Or do you think people are still questioning on the security issue? I guess in lines, yeah.
So I'll assume that by security issue we mean security of banking services. So I think it will take a little bit of time, and I think that was factored into many of their business plans. I don't think anyone expected a huge initial rush to sign up and instantly switch. I think it is about building trust over time, and it's about building that brand. Not that Europe is necessarily an indicator for exactly what will happen in Asia, but it has taken 5 or 6 years for some of those banks to really build up a sustainable customer base. So I think proving that you're capable of keeping people's money safe, of consistently offering a high level of service and being quite differentiated in terms of how you deliver that service will over time attract people. So I think it will happen if they continue to thrive and continue to be successful, but I think it will take some time.
I agree with you. So last question. So the last question is, are asset managers like PE or hedge fund in Asia also creating value through greater investment in digitalizing their operations and technology function? Or are they relatively behind compared with banks?
From what we see in the market, they're behind. Not everyone, of course. That is a general answer, but I think asset management and wealth management is an area that has such high potential in Asia. You've got a growing customer base, you've got large demand for those products, but the cost of servicing those customers tends to be quite high, and there aren't that many truly digital options out there. I think if I was an asset manager, I'd be looking very closely at SoFi. If you look at what they're doing in the States, if you assume that they would want to try and bring a similar set of products and services to Asia, I think they could really disrupt things in Asia. So I think the strategy here is look at your technology and operations and assess very quickly how you can digitize these further, because we talked about the impact of COVID on retail, but equally it was hard hit on asset management as well. Again, more wealthy customers who previously always wanted to talk to the RMs in person have now been forced to talk to them over Zoom or over video, and actually they've become really comfortable with that and adapted quite quickly to that. So I think it's equally important to look at digitizing your tech and operations if you're an asset manager as well as if you're a bank. But there is a lot of space to play for new virtual asset managers, if you like, if they were to come in and try and disrupt things. So yeah, absolutely. I think that's an area that we'll see a lot of action over the next 2 or 3 years.
Thank you. So I think we're running out of time, so we might not be able to answer all the questions. But for those of you who wish to revisit the slide or the presentation today, we have actually recorded this presentation today, and we'll send out accordingly, perhaps in 2 weeks' time, to all the attendees today. So I'll probably go to wrap up then. Is there anything that you would like to mention before I wrap up? Then.
No, just thank you for having me, and enjoyed talking to you all today. Thank you.
So yes, thank you very much, Dan, as well. Thank you, everyone. We appreciate you being here, and we'll see you again next time. Thank you.